How to use index funds and ETFs for passive crypto income. Index funds and ETFs offer attractive options for passive income investing, providing investors with diversified exposure to various crypto assets. Analysis. Join us on social networks. The key to gaining financial security and independence is to invest in passive income. Passive income is generated through investments that offer a consistent source of income with little continuing involvement, in contrast to active income, which necessitates constant effort and time. Passive income is especially valuable because it enables investors to amass wealth and live independently. Passive income investing, explained. Investing in index funds and exchange-traded funds, ETFs, is a popular passive income strategy in the traditional financial market. Index funds are passively managed mutual funds that seek to match the performance of a chosen market index, such as the S&P 500. ETFs, on the other hand, are similar to index funds but trade on stock exchanges, like individual stocks. ETFs and index funds have a number of benefits for passive income investors. They instantly diversify investments among a variety of securities, lowering the risk involved with holding individual equities. They are also economical because of their low expense ratios, which makes them perfect for long-term investing. These funds also give investors the chance to earn income from dividends and capital gains, enabling them to build up their wealth over time. An investment fund, such as a mutual fund, index fund or ETF, has expenses that go along with owning and administering it. The expense ratio measures follow the URL for the full article. For more on this story, visit the news article link.